As you must have all understood from the thumbnail about the today's topic, yes, in today's video we will discuss about not so popular ELSS fund, that is Parikh Tax Saver Fund. We all need to do tax planning, and here the ELSS fund comes in quite handy. You all must be aware that investment done in ELSS scheme up to 1.5 lakhs in one financial year is tax exempted under Section 80C of Indian Income Tax Act. Here I will not go into details of 80C, but will review the fund's performance only. And by the end of the video, we shall be able to decide whether to invest in this fund or to continue our investment in this fund or should exit this fund now. So please watch the video till the end. Hello everyone, I am Dhaval and welcome to my channel DIY Finance. To start with, we all know that Parikh Tax Saver Fund has been one of the star performers in its category, that is ELSS category. But unfortunately, it is not much discussed in the community. Here we will be taking into consideration data of direct plans only. Firstly, let's look at the basic details like AUM, that is the total asset under management, which is around 770 crores, which is quite less for a ELSS fund. The reason for this low AUM can be that the fund is quite young and was started in July 2019 only, while the expense ratio is 0.84%. That is a little bit on a higher side as compared to other schemes. The benchmark index, that is the reference against which the scheme is compared, is Nifty 500 DRI. Here in the scheme, there is no exit load, but there is a lock-in of 3 years as this being a ELSS scheme. Now let's look at the sector-wise allocation. From the graph, it is very clear that the fund is heavily invested in finance, followed by technology, automobile and consumer staples. Finance and technology being a core sector and consumer staples being an evergreen sector, and quite a good performing large and mid-sized companies form a part of this sector. And when compared to its benchmark, its allocation is quite different except for the financial sector. The allocation in the financial sector is around 30%, and such high allocation in a single sector can lead to performance issues when the sector does not perform well. Now let's also look at the top holdings in portfolio allocation. As evident, Bajaj Holdings, HDFC Limited, ICICI Bank and Axis Bank are the main stocks of the financial sector, whereas HCL Tech, Wipro and TCS are from the technology sector. Maharashtra Scooter is from automobile sector and ITC is from the consumer staple. Here, the stock selection looks quite good. On checking the portfolio allocation, it is evident that the large cap shares form around 78% of the portfolio, whereas mid cap shares form other 10% and rest 12% is allocated to small cap stocks. Its allocation is similar to that of a large cap fund. ELSS funds has the privilege of investing across categories without any capping. But this large cap fund type of allocation provides a good downside protection during bad phase and also be able to generate a good return with lesser risk. I have discussed this downside risk protection in the later part of the video. Also, the portfolio is highly concentrated, that is, it has only 28 stocks in the portfolio and top 10 stocks contribute to around 60% of the portfolio. This type of portfolio allocation is quite good and suitable for a long-term investor. Mr. Rajiv Thakkar, along with Mr. Ronak Onkar and Mr. Raj Mehta, has been managing the fund since July 2019, that is, from the inception of the scheme, and that too very efficiently, and hope that he continues in future also. Here, this long-standing association of the fund manager with the same scheme is quite positive and an advantage for the scheme. Now let's see how the fund performs on risk parameters. Here, we compare the parameters with the benchmark index and category average. First, the mean return, that is, the average return in a year, which is 23.36, which is more than both the category average and the benchmark. Here, higher the value is better. Second, standard deviation, that is a tool to measure how much the return has deviated away from the mean return, which in this case is 18.26. and is also less than both the benchmark index and the category average. Here, lower the value is better. Third, Sharpe ratio, that is a tool to measure the risk adjusted return, which is 1.09, which is more than both the benchmark index and the category average. Here, higher the value is better. Fourth one, beta, that is the volatility of the scheme compared to benchmark, which is 0.73, which is less than the category average. Here, lower the value is better. Fifth, alpha, that is a tool that measures how much better the fund has performed compared to the category. Here, it is 8.06, which is far more than the category average. Here, higher the value is better. Here, on all risk parameters, Parikh tax saver fund performs better than the benchmark index and category average, which is very positive sign for a fund. Now let's compare the trailing returns. On comparing the trailing returns for 3 years, 1 year and 6 months, it easily beats the benchmark and category with a good margin. The returns of 3 years and more is not available as the scheme is launched in 2019 only. The better performance of the fund than its category and benchmark is a good sign for the fund. Now let's check the calendar returns and see how consistent the fund is in its performance. On checking the calendar returns for 2020 and 2021, for both the years, the fund has been able to outperform its category and benchmark. Now also let's see the returns for the calendar year 2022. On checking the quarterly returns for the first 3 quarters of 2022, it is evident that the fund has outperformed the category and the benchmark. Hence, it can be concluded the fund is quite consistent in its performance and is able to beat its category and benchmark all the times, which is quite a good for a fund. Now let's also see the rolling returns. On checking the rolling returns for 3 years, 1 year and 6 months, it can be observed that the fund's performance is better than the benchmark and has been able to beat the benchmark 100% for 3 years. And for 1 year and 6 months, it is 80% and 77% respectively during the returns period, which also indicates that the fund's performance is quite good. Now let's see the upside and downside capture ratios. The upside capture ratio is the measure of how the fund performed relative to the index during the period when the index rose. Here, the value is 84, which indicates that the fund underperformed 16% less than the index during the rise period. Here, higher the value is better and should generally be more than 100. The downside capture ratio is the measure of how the fund performed relative to the index during the period when the index has dropped. Here, the value is 45, which indicates that the fund declined only 45% as compared to the index during the fall period. Here, lower the value is better. The upside ratio has been less than 100, which is not a good sign. But with a better downside ratio protection, it tries to compensate for the loss of the upside ratio. So considering both the parameters, it can be safely assumed the performance of the fund is good. Now let's see the risk return graph. Here on x-axis we have standard deviation, whereas on y-axis we have total returns. It is very evident from the graph that the fund has a better total returns value with lesser standard deviation as compared to the category average and the index, which indicates that the fund has been able to generate good returns with less volatility than both with category and index. On almost all parameters, Parikh tax saver fund performs better than the benchmark index and category average, which is a very positive sign for the fund. So now coming to the conclusion, what investors should do. Before concluding this video and suggest what investors should do, I would request all of you that as you have watched the video till now, it seems that the topic is of your interest. Hence, I would request you all to press the like button and also subscribe to my channel to watch such interesting videos in future also. So now let's look what investors should do. First, the existing investors. As the fund's performance has been quite good since its inception and also performs better than the category and index on risk parameters, I feel that existing investors should continue their investment without any worry. Second, for the new investors, they can start investment in this fund as the fund performance is good. Surely, The fund is quite young, but the performance record in last 3 years have been quite good, and moreover, the fund manager, Mr. Rajiv Thakkar, and its team has an excellent track record for delivering excellent results. I would like to add that I don't have Parikh tax-saver fund in my portfolio, but may think of starting an investment when I need a tax-savers fund. I will again try to review this fund after 6 to 7 months and check its performance. So stay tuned to my channel. Please subscribe to my channel if you have not done till now, and also press the like button. Do check my older videos. Click the attached video cards to watch the videos. Thank you.